morning, I'm James Gruber and welcome to the Morning Report for Monday the 20th of July. Well, it was an eventful end to last week and there's been plenty happening since then that will impact markets today. We saw another big drop-off in US markets on Friday. Semiconductors were again partly to blame as they finished 10% lower for the week. But on Friday, the weakness in chip stocks morphed into a broader market sell-off. Events over the weekend won't help markets today, as on Sunday morning, our time, US President Donald Trump authorised strikes on Iran in retaliation against Tehran's attack on Jordan, which left 2 US military personnel dead and another missing. Looking ahead to this week, there are more big earnings results out of the US, with Alphabet and Tesla to report on Wednesday, while in Australia there are jobs figures out on Thursday. Let's take a deeper look at what's happened with Aussie futures, commodities and currencies. The ASX index futures point to a 0.6% higher start, though that was before the fresh US attacks on Iran. As for the ASX 200 on Friday, it fell 0.5% to 8,797 points, posting a second consecutive weekly loss. It came as a slide in BHP and the broader mining sector outweighed a rally in energy names. BHP fell more than 5% over 2 sessions after warning of lower copper production next year. Electricians of BHP's high-voltage network in the Pilbara voted in favour of work stoppages after hundreds of workers at its Port Hedland iron ore operations went on strike. Today is likely to see another spike in energy stocks as oil prices rise on the latest strikes in the Middle East, and tech may again struggle given what happened on the Nasdaq on Friday. On commodity markets, global oil prices climbed to their highest in more than a month on Friday after the US and Iran stepped up attacks across the Gulf, with shipping threatened by a potential Red Sea closure on top of the restricted traffic through the Strait of Hormuz. Brent crude futures settled almost 5% higher at above $88 a barrel. Base metal prices were mixed on Friday. Copper futures dropped 1.2% as the Middle East war weighed on the demand outlook, while aluminium futures rose 1.2% on continuing concerns about supply. Gold futures meantime rose as recent economic data reduced the odds of a US rate hike. The futures settled up 0.7% at $4,019 an ounce. Iron ore futures, meantime, were flat, $98.88 a tonne. Let's now turn to currencies. The Aussie dollar was last trading down this morning, 0.3% lower at 69.64 US cents. Let's take a step back to see how Wall Street and other world markets did. The Dow Jones index finished down 0.8%. The S&P 500 fell 1% and the Nasdaq lost 1.4%. A closer look at the trading day there. US share markets extended their declines on Friday as a pullback in stocks associated with the AI boom, which has driven many of the gains so far this year, morphed into a larger risk-off sentiment. Energy was the only sector in the S&P 500 to gain, benefiting from strong oil prices. The Philadelphia Chip Stock Index fell 1.6% on the day. Among the Magnificent Seven group of AI-related megacaps, all but Apple dipped, with Meta and Alphabet suffering the worst of it, down 2.7% and 3.2% respectively. Netflix tumbled 7% after the company's weaker-than-expected earnings forecast raised doubts about the sustainability of content growth momentum. Uber Technologies dropped 2.1% after the rideshare app announced it would acquire Germany's Delivery Hero in a deal worth nearly $15 billion US. Intuitive Surgical shares slid 14% after the medical device maker kept its Da Vinci procedure growth forecast unchanged and warned of insurance plan changes may be delaying patient care. Meantime, US government bond yields were mixed on Friday as investors weighed the domestic outlook and fresh Middle East strikes. The Labor Department said import prices increased 0.3% last month, above market estimates, indicating declines in the costs of food and energy products were more than offset by higher prices for capital and consumer goods. The US 10-year Treasury yield declined 2 points to 4.55%, while the US 2-year Treasury yield gained 2 points to 4.18%. Moving to the European markets, the continent-wide FTSE Euro First 300 index ended down 0.4%, while the UK FTSE 100 added 0.3%. Europe was mixed, weighed down by a global rout in tech stocks, leaving investors on edge as they prepare for this week's European Central Bank meeting and corporate earnings. Utilities stocks rose 1.6% and were the biggest gainers on the benchmark, while luxury was the best performing sector for the week. Britain's Burberry slipped 6% after the luxury group said the Middle East conflict had weighed on tourist spending in Europe. Saab rose 10% after the Swedish defence and aerospace group reported a bigger than expected increase in second quarter operating profit. Let's now take a look at what's on the watch list. In Australia, there are a number of companies with quarterly updates this week, including South32, Yancoal and Aurelia Metals today. In the US, Domino's Pizza releases its earnings result. There's also the Conference Board Leading Index for June scheduled today. And that's it for today. For further developments on the local trading session, please tune into the CommSec Market Update podcast this afternoon and, of course, the Market Close video. Have a great day.